we got hit with a good old-fashioned pump fake in the markets today. Now, if you have not seen my last video about the manipulation of AMC stock, go ahead, take a look at it. We will talk about it here in this video, but that last video went over more in depth what actually happened today. Now we need to focus on what is ahead, because that is the most important thing. After all, there's no sense in looking behind. You always gotta look ahead. That is why the rear view mirror is smaller than the windshield, baby. It is time to go. Hope you guys are excited. AMC did just acquire a new movie theater chain. We need to talk about that, the catalyst for tomorrow, what is going to happen with AMC and the broad markets, what am I doing with my position. We're gonna get all into it. It's just a jump, skip, and a hop away just a couple of minutes from now. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you have any comments, questions, or concerns, come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time every single day, including tonight, where we go over everything. If you guys also want to come trade with us live in real time, check out the link down below in the pinned comment. All right, ladies and gentlemen, let's briefly go over what happened here with good old Amy. We tried to go for a run a couple times here in the day, did not happen, especially in pre-market. Look at that run that you've seen when CPI data actually first came out. It came out at 8:30. Look at the time here. The stock started to rip and was seeing pretty big candles. The first candle was 1.30%, and it kind of just kept going all the way up. Pre-market, we were up quite substantially, and then what happened as soon as market opened? Boom, the stock cratered into the ground. Why is that? Because there was a lot of shorting activity that took place on AMC stock today to really crush morale and to try to soften a potential rally that we could have possibly seen. Because as you guys do know, the markets closed red, almost down 0.5% on the NASDAQ and S&P, but the markets were up over 1% apiece at times today. It was very, very brutal, let's call it that, in the markets. But AMC did the exact opposite of the markets. The markets, when CPI data came out, they went up, they headed down into the open, and then you rallied. AMC, the exact opposite story here. It went up, it just kept going up, and then it immediately sold off once market open did happen. So what kind of conclusion can you draw from that? Either there is a lot of manipulation that caused that in different various forms, or it's likely that mixed with a lot of coordinated shorting activity right off the gate. If shorts can hammer stock before the buyers are even able to get to the stock, it does a lot of damage, right? Because if you hammer a stock down in the beginning of the day, it's a lot harder once you see these rounds of buyers come in to actually push the stock back up and to actually make it positive. So AMC did close down about 7%. So not a great day whatsoever. A lot of stocks inevitably did come down comparable amounts to AMC. But AMC was definitely one of the first stocks and one of my only stocks in my portfolio that was actually red in the beginning of trading today. So that in a nutshell is what happened today. What I will say is that stocks really cannot hold rallies right now, especially the retail stocks, unless there is a catalyst. Now, if there is a catalyst, it's a lot harder to manipulate a stock once the market opens or in pre-market or after hours, because there's a lot more people trying to trade it. There's a lot more, money flowing into it. Even from institutional investors' standpoint, they make trades off of these catalysts as well. So until you do get a solid catalyst to cause or drive a big move, that's likely what you're kind of gonna see is the shorts are going to be in control for just a little while. But as we do know, AMC ran from 13 to 35. What in your right mind would think AMC could not go from 1750 to 50, right? It's a comparable ratio. Even here in after hours, AMC is up 0.75%. It looks like the markets in general are starting to get a little bit of a bid here in after hours. Now, AMC in particular is going to have a catalyst tomorrow. It is going to be BBBY, did I say three B's? BBBY earnings here in the morning. That is Bed Bath & Beyond, and that's going to be pretty damn important for the retail sector to see, what are people doing, for one, consumer-wise, as well as is AMC and GameStop still going to correlate with Bed Bath & Beyond? If Bed Bath & Beyond has a really good earnings day, is AMC and GameStop going to react the same way? And I possibly I think it's more probable that they will still be correlated, but we will see once it comes out. BBBY is crushed into the ground as well, so I think they have a really great chance at rallying, and there was rumors about a potential buyout or something along those lines. So it's going to be pretty crazy here in the morning. We got multiple other catalysts to talk about here in just 1 second, but we got to talk about AMC has acquired 7 Bow Tie Cinemas, and it does say AMC increased footprint in Connecticut, New York, and Maryland with acquisition of 7 Bow Tie Cinemas. And I kind of want to talk about later, not in this video, but the fundamental case for AMC, the backdrop here. AMC acquiring more theaters, acquiring more stakes in different companies. What does that do for AMC? Because as you guys do know, the worst case scenario for AMC is the fundamental valuation. So let me know down below in the comment section if you guys kind of want a little bit of a deep dive into the fundamental outlook for AMC and where your worst case scenario could be. If shit hits the fan, where is the fundamental valuation? That's going to be very important, and I think you guys will find a lot of value out of that one. But now let's get into we'll talk about the Ortex data, all of that good stuff, the Stonko tracker data, the Max Payne, but I do want to go over the catalyst for tomorrow and really what happened today as far as the CPI data is concerned. So if we do pull, let's go ahead and find the right article. Is it right here? Oh no, not the right one, not the right one. It gives it to us in a nutshell. So consumer prices rose 8.5% in March, slightly hotter than expected and the highest since 1981. Headline CPI in March rose 8.5% from a year ago, the fastest annual gain since December 1981 and 1/10 of a percentage point above the estimate. Surging food, energy, and shelter costs helped account for the gain. Retail worker earnings fell by another 0.8% during the month as the cost of living outpaced otherwise strong pay gains. So the inflation reading, the headline inflation reading came in at 8.5%. It was only expected to come in at about 8.3%. So that was actually a beat. But what actually was better than expected was this, the core CPI month over month, and that came in at 0.3%. That's excluding food and energy. That's what core CPI is, and that's really the main thing that drove the higher headline CPI number right here. 8.5% expected to come in around 8.3, 8.4%. So a little bit worse right there and a little bit better as far as core CPI. Excluding energy and food, the inflation picture does not look all too bad. It looks like we might actually finally see a top. Now, why did the market sell off because of this? Well, I think the most important thing for the markets and what they really care about, like I've said for the last couple of days now, is going to be bank earnings in the morning with JP Morgan and this other one. It's a less known one, First Republic Bank. Those are going to be very, very important because the markets, sure, they don't like inflation, they don't like the Fed raising rates, but the only two things the markets really care about is the Fed balance sheet as well as the possibility of a recession here in the near term future. One, because the balance sheet is unpredictable. We don't know how that will affect the economy, how high interest rates will go. And at the same time, if we're going into a recession, that's a lagging indicator. So you need to see 2 consecutive quarters of declining GDP growth. We could very well possibly already be in a recession and not know about it. So any hints towards, confirmation if we are in a recession or getting close to one is going to be very important. And that's really going to come from the bank earnings. And that's going to let us know how the consumer is doing, people like me and you. Now, on top of that, the other big data points that are going to be very important as well and almost equally as important as the bank earnings is core retail sales month over month for March. That does come out Thursday at 8:30 in the morning as well. That is the last day of trading, and you do have initial jobless claims, which I don't expect that to be a big catalyst. It does always say it's a high volatility expected event, but really core retail sales and bank earnings, that has been my main focus for this week. That's going to set the tone, set the trajectory for really what is to come, as well as these Michigan consumer expectations, Michigan consumer sentiment, Michigan current conditions, Michigan inflation expectations. These move the markets a lot, and it says low volatility expected, but these actually move the markets a lot. It comes up on this catalyst whatever this is called, Catalyst News Calendar, right? It comes up on that. It's pretty damn big once those come out. You could see pretty dramatic moves in the market. So I want to pay attention to all of that. But really, JP Morgan earnings in the morning, I'm going to watch those. And I'm probably going to talk about those in videos. So just get ready for that. It's going to be very, 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 very important. Now, let's get into exactly what is going on with AMC for the day and the data. So as far as the Stonko Tracker data, about 283,000 calls that are out of the money, about 10,000 calls that are in the money. Yes, you could see a gamma squeeze based off of that, but a lot of the move that we see, especially during the last rally, was not due to people just holding options on the option chain. It wasn't due to a large amount of options that were out of the money. It was actually due to a lot of options traders that just went in and started to buy weekly AMC options because the premiums are cheaper. So the market makers, they don't have as much cushion room before they do have to actually go out and start to hedge out those positions when they do go against them. And hopefully by now you guys know what that is. If you don't, stick around a while, you will learn all of this stuff that I am going over here in these videos. That is just very important for trading in general. It's not really about just what happens with AMC. It's, really about the macro as well. Hopefully you guys are trading, you guys are making money out there. If you're not, consider checking out the trading group link down below in the pinned comment. It's definitely a good place to be if you are new to options or we do more than options. We trade crypto and just penny stocks sometimes, but usually that options trading, that's what's going to turn $15 into $30,000 or $50 into $5,000. That's where you get those big monstrous gains. So come join us if you guys want to be a part of it. Now the max pain for Thursday is $20 per share. That would obviously be a welcome move since we are sitting at about $17.42 per share, excluding the 3-cent move in after hours. So $17.45 per share currently is where we are at here in after hours. We will see if that purchase of those theaters from AMC will have an effect, but I don't really think it will be. We'll have one, throughout the rest of this week in a dramatic way. It's not going to be a huge breaking news catalyst just because it's along the same lines of what they already do as a business. So we really need to see AMC diversify, and that's something that I would push Adam Aron to do if I were you guys. I think that's definitely a positive and will inevitably cause the MOAS. Now let's talk about the option flow sentiment. So you had 22 orders totaling $5.31 million, positive order value of 20%. Earlier in the day, we had 70% positive order value. So shorts are really using the option chain as well to hammer down the stock and to keep the stock down for today. And it surely did work, down 7%. A lot of that had to do with the options, especially the May 20th puts are coming in very heavy, as well as the April 14th put. So a lot of these hedge funds are gambling on those weekly options, whether it is to the bullish side, to the call side, or to the put side. So you're going to see a lot of back and forth activity with AMC, but we went up a lot. We've come down a lot. I think we are well overdue for a bounce, and I think that is what we are going to come once the markets do kind of become more favorable to a lot of retail stocks, kind of like AMC, which will inevitably happen. We need to go over the fundamental valuation later on today, because what if it doesn't happen for a while? What is the worst case scenario? What is the fundamental valuation? So very, very key and very important. Let's go ahead and take a look at the short interest, and then we can wrap up this video. We'll look at the technicals just briefly, but nothing really has changed since what we said in the last video. We're looking at 20.1% short interest of free float, 103.58 million shares that are sold short, cost bar max of 3.23%, and the utilization of 100%. That's very important, because don't think for a second if hedge funds and institutions that own AMC stock would not lend out their stock for extra premium if they thought the stock was not going to move up. They would absolutely do that, and you have not seen them come out and start lending out massive amounts of shares. So that's definitely a bullish sign. Days to cover is sitting at 2.40. So all of this is very, very bullish. We're over 1 day higher as far as the days to cover comparatively before the June rally as we are now. So we're definitely primed to see a short squeeze in that sense. It's going to be pretty hard for shorts to get their hands on shares to cover in large amounts when they are forced to. And the markets coming down, like we have seen, is music to our ears. You actually want to see the markets come down. You want to see interest rates going up. You want to see all of these bearish things happen for the markets, and then it dries up liquidity, and hedge funds have less capital to service those margin calls when the next big catalyst does come out for AMC stock. Now, before we wrap up the video, we got to look at the technicals because we are under the 50-day moving average. So I would say the short-term bottom would be around $15 per share. I don't expect us to go to $15 per share, but if tomorrow is a very, very red day, it's possible that we do. We dropped a whole $1.30 today. That would put us close to $15 per share. Certainly possible, but you know, I think the fundamental valuation is even pretty damn attractive right here. If we do see a green day tomorrow, if consumers are looking good, they are spending money, they are going into debt, which is great for the stock market. They love people spending money, no matter if it's debt, no matter if it's capital worked for. They don't care. If that's good, AMC stock will likely rally again back to about $20 per share. We might go close to that max pain level by the end of the week. So that's going to be pretty cool. If we can do that, it's going to be a good sign. But the MACD is incredibly bearish now, and the RSI is stretching down to severe oversold levels. So right here, I feel very comfortable averaging down to my position. If I was not able to, you know, before the last rally, then I think it's a pretty good time to average down on those positions, as well as purchase some options potentially for June or July that are, you know, further out the money, that gives you enough time to see a bounce and see that implied volatility work in your favor. So that is going to be all for this video. Hit that like button, comment down below, subscribe to the channel, all that good stuff. If you guys want to come trade with us live in real time, like I said, the link for the trading group down below in the pinned comment as well. You guys enjoy the rest of your day, and I'll see you in the next one.